What's up, you guys? It's Henry, and today we have to have a talk about a hot renewable energy stock that I covered 2 times on this channel before. The name is Plug Power, and Plug Power is up over 30% in October. I started recommending this stock at $11 per share because I saw a lot of potential. The hydrogen market isn't as hot as the battery market, but I see a massive potential opportunity since there's less players in the hydrogen space, and Plug Power has some key advantages that you have to know about. Its analyst sees a potential game-changing opportunity beginning to emerge in green hydrogen. Car makers have experimented with hydrogen vehicles for decades using fuel cells to convert the most abundant substance in the universe into electric energy. Compressed hydrogen is stored in liquid form in a tank with the only emission being water. Although hydrogen is the most common element in the universe, it doesn't exist in its pure form on Earth. This means if we wish to use it as fuel for our cars, we need to produce it out of other components like water, natural gas, and other fossil fuels or biomass. And for this, energy needs to be used, and environmental and economic costs enter the equation. But as I am about to discuss, Plug is innovating and executing their business strategy, and we have to pay attention to that. Plug Power is developing hydrogen production businesses to produce the fuel that will go into their fuel cells. In so doing, they're positioning themselves to profit from an international trend towards developing hydrogen economies. In particular, Europe, where governments plan to invest hundreds of billions of euros in technologies enabling Europe to get a substantial share of its energy from hydrogen by 2050. That's a large opportunity that Goldman Sachs is looking at. Vehicle fuel cell supplying is just one part of the potential business Plug can create. There is a ton of hype surrounding fuel cell powered promoter Nikola and Trevor Milton garnering big headlines with his massive promotions, and I won't comment on Nikola as a company, but there is a good reason that investors are getting excited about hydrogen since we have entire countries committing to go green with this resource. But I'm here to highlight that Plug has a business that is growing fast, and it's milking the hydrogen industry. They really make their money in a little niche powering conglomerate companies' forklift fleets with their fuel cells. The company has a big relationship with Walmart subsidiary Asda. Asda currently ranks as the UK's 3rd largest supermarket retailer and a market share of over 15% and annual revenues of more than $20 billion euros. I combined euros and US dollars and said euros. That is the strangest thing ever. But you guys get that I meant euros. Plug not only is expanding their supply of forklifts to Asda, but it already has a relationship with Walmart. In fact, it supplies over 10,000 forklifts to Walmart. I opened Plug Power Q2 report and found some interesting insights into their growing business. For example, as quoted in their quarterly report, as of the year end 2019, Plug Power's products are moving 25% of the retail food and groceries throughout the United States as we support the needs of customers like Walmart, Amazon, Kroger, SuperValu, Wegman, and Arizta. So that came directly from the 2019 report, and in the first quarter of 2020, Plug Power reported that numbers had risen to approximately 30% as demand peaked with key customers, and this trend continuing during Q2 in 2020. So what actually happened with Amazon is not only are they a customer, but Jeff Bezos wanted to own part of his supplier, so Amazon agreed to purchase up to $70 million worth of Plug Power equipment and was granted warrants to buy up to $55 million of Plug Power shares in a deal back in April 2017. This isn't recent, but this is a long-term play, so I bet Plug has only become more valuable to Amazon since that has happened. I need to tell you the other things Plug is working on so we can see if the skyrocket in the stock is actually justified or not. Plug completed acquisition of United Hydrogen and Guinier ELX, accelerating their green hydrogen strategy and capacity. This planned capacity addition of green hydrogen will serve the significant and rapidly growing demand from current customers, as well as position the company to target existing large and growing hydrogen markets. Plug Power projects that its existing customers will use almost 100 tons of hydrogen per day by 2024 and expects over 50% of that to be green hydrogen. I mean, look at these forklifts. Did they not look fun to you? This guy is pulling up like he's driving a Lamborghini Aventador, steps up on a safety mat, connecting the data cables into Gen Fuel, then grabs the de-water hose and finally connects the hydrogen nozzle. How long did that take? Like 15 seconds? Do you guys know how much time and money that saves a company like Amazon or Walmart? Typically, electric forklift batteries take 8 hours to charge and need an additional 8 hours to cool down before use. Let's just take 10,000 forklifts from Walmart. If each forklift saves just an hour through the workday of an employee at minimum wage in America, that's over $70,000 a day across all facilities, not to mention other favorable factors. If you're enjoying the video, drop me a like and subscribe to the channel. Now I'm going to answer, is Plug stock a buy? Well, the stock was recently upgraded by Morgan Stanley to overweight in late September. Plug also finally beat earnings in Q2, breaking 3/4 of missed earnings. This shift in momentum is a good sign for investors. It's reaching all-time highs right now, and it's really breaking out. Seems investors are going crazy, and this stock could hit $20 pretty soon. In my opinion, I like this company because they have strong relationships with big brands. I also like that they are in a trending market and they have a very bright future. The only issue is they are burning cash. Despite more than tripling its revenue over the last 5 years, Plug can't seem to convert the top line growth into bottom line profitability. It hasn't posted a single profitable quarter since 2014, and that is quite some time without profit. And they almost had a profit last quarter, but they came in at like about -3 cents. That is quite a lot of time without being profitable, and they almost did it last quarter, but they were just kind of not quite there. To keep itself afloat, Plug keeps issuing more shares of stock, diluting the value of existing shareholders' position. In August, Plug announced that it's issuing about 30 million new shares, which will raise about $300 million for the company, added to the 316 million shares outstanding already. That's almost 10% dilution, which comes in on top of the 78% dilution over the last 5 years. It's pretty much fine when Tesla dilutes 1 or 3%, but 10% is pretty significant. Profitability isn't vital now for a company at first, but eventually a company has to earn profits or it doesn't make sense for an investor. Luckily, I think Plug will eventually start throwing in profits. I have no idea when, but if it keeps growing at a fast clip, it will eventually spit off profits. Since hydrogen can be a $1 trillion industry in the futures, investors are pretty much willing to bet that Plug Power is worth about $7.5 billion right now. That's reasonable for a company with relationships with Walmart and Amazon, amongst other big name companies. So for me, I'm staying bullish on this stock as a small fraction of my portfolio, and I think this could be a great addition if you're interested in green energy. What do you guys think about hydrogen? Drop me a comment. As always, thanks for making it this far in the video. If you made it this far, you're the real MVP, and I'll see you in the next video. Fist bump.